Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds to 9 o'clock. With news, commodity-based economies may be in for a lean time. But first, US jobs growth was strong in September, according to the ADP Employment Report. That is the precursor to the non-farm payrolls report that is due out on Saturday morning. And it showed a higher than expected 200,000 new jobs were created in the private sector in September. If the same annual pattern persists this year, it is likely that the official non-farm payroll data for August will get revised higher as well. A strong report Saturday will all but lock in a Fed rate hike on October 29 because the recent PCE data also came out above Fed expectations. That is something of a contrast, however, to the IMF's view on global growth in 2016. It won't be much more than what we see in 2015, they say, and they warn of impacts on resource-based economies. And just how hard Australia will be hit by China's changing resources appetite is revealed in a recent review that predicts Australia will export virtually no thermal coal to China in 5 years. That would be a very major loss for them. And iron ore demand is being overwhelmed by huge competitive supply, driving down prices sharply. In Australia, building consents for housing dropped 6.9% in August from July. Markets were only expecting a fall of 2%. While this data can be a bit volatile, it was a head-scratching surprise in the lucky country and embeds a lower trend we have seen for some time now. Australia's economy may be about to be disrupted, but that is nothing like what the banking world is about to see. At least that's what global consultancy McKinsey is warning. They say that up to 60% of bank profits are now in threat of offerings of new entrants into the payments world. Mortgage and wealth management are also areas under serious threat. In Europe, data out overnight shows they've returned to deflation, but solely because energy prices have become so cheap. China is on a week-long public holiday. In New York, the US Treasury 10-year yield benchmark is rising today and is now at 2.07%. While investment-grade yields are still pretty modest, credit spreads are widening. In fact, CDS data out overnight for Australian corporate investment-grade bond spreads show they are now up to levels we haven't seen since early 2014. Even sovereign bond spreads are widening quickly, the Chinese one notably. They've jumped by a third in 8 weeks. Rising spreads will limit the ability of banks here to pass on the full benefit of lower swap rates in their mortgage pricing. And even more notable is the sharp rise in junk bond interest rates. The US benchmark oil price is unchanged at $45 a barrel, Brent is at $48 a barrel. The gold price has slipped yet again, is now at $1,115 an ounce. However, the New Zealand dollar starts the month noticeably higher. The futures market indicators on dairy prices remain remarkably strong, indicating another 20% jump at the next auction. The New Zealand dollar is now at 63.9 US cents, 91.1 Aussie cents, and 57.2 Euro cents. The TWI is at 68.7, its highest level since late August. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.